Yeah, good morning. So again, US market continue its earlier trend and decline uh, further in yesterday. Futures are more of a flattish, but Asian markets are indicating some negative trend and are down by almost around 0.25 to 0.5%. And in the commodity also more of a flattish market. Oil is similar to what yesterday's level, but what we see that aluminum is down by around 0.5%. Iron ore is more of a flattish, and steel is also marginal down from yesterday level. Uh, some changes in the today's morning is been visible in dollar index. It has declined sharply just a few minutes ago because of some policy changes by the Japan. So that can have impact on the other market as well. Some policy central government has tweaked its uh, policy in Japan, which is giving some positive signals to the market. So one should be keep a cognizant of that particular things in today's trade. Uh, so overall seems apart from that seems more of a sideway market. Need to assess what has changed in that respect. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we saw that bounce back rally at a lower level, but Nifty has immediate resistance and upside 18,470. If Nifty break that level, then we expect further rally. Otherwise, we technically is a strong resistance for Nifty. Next immediate support place around 18,370, 18,240 at downside. So today's we expect again pressure in market. If market Nifty open up below 18,370, then we saw that Nifty trading towards 18,300 and 240 at downside. Bank Nifty also facing immediate resistance around 43,650, 700 and upside, and support flow immediate support place for Bank Nifty around 43,400. Below 43,400, then next target it will be the 43,200, 43,000 and downside. Nifty Finance also trading upper range, and we expect is facing a resistance around 18,670, 700 and upside. Uh, First immediate support place for intraday 18,530, and below 18,530 next support place around 18,450. So all three index we expect today again trading in negative zone. Stock specific, Infosys, TCS looks weak, IT sector looks weak at current level. Positive side, HDFC Life look positive at current level. We already given call HDFC Live by call towards target 600, and TCS Infosys looks weak, and we already given sale call in TCS. Downside 3,100 first target and 3040 next target. Upside major resistance for TCS 3270, that is 200 DMA. So these two stock we can closely watch. TCS for negative side and HDFC Life is positive side. That's it for technical derivative icon.
Yeah, thank you. Good morning, everyone. So on the derivative front, we are seeing that Nifty was facing a resistance at 18,500 level, and yesterday Nifty future almost gave closing at 18,499 level. So if we look at the overall OI position, the call rider positions are getting liquidated at the near ATM strike on the weekly basis, while against that the put rider positions are getting added sharply around 18,200 to 18,400 strike. We have seen a good pullback in yesterday trading session from the supportive zone of 18,200 level, which we have seen that Nifty got into selling zone into last week Thursday and Friday session, and in yesterday's session from that supportive level we have seen the pullback was very strong, and the selective buying being witnessed from the sectors like FMCG, auto pack also. So overall, if you look at the PCRY, also PCR is currently yesterday closed at 1.01 and is having support at 0.88 level. We are seeing that the SGX is likely to open on the lower end, almost around 60-70 points on the down end. So once if in today's trading session again, once a Nifty future goes above 18,500 level, then we expect the fresh buying to be witnessed towards 18,700 level, because directly at 18,700 level we are seeing that the call writer positions are getting added up. So first resistance would be 18,700 level, and on the downside 18,200 will act as an important supportive zone for the next fresh short position to get added on in the market. So hold a long position with the support of 18,200 level. As per stock specific, as I said, that FMCG packs look positive, and in yesterday's session we have seen that good buying has been witnessed from the selective stocks like Colpal, Britannia, and HUL. From these three counter, I expect that HUL is showing more strength, and we expect around 5 to 7% rally in HUL in coming trading session. That's it from the derivative session. Thank you.
Good morning. HDFC has raised the prime lending rates by 35 basis points. And currently, the best rate that they have for the good customers is 8.65%. And cumulatively, it has increased the lending rate by 225 basis points since May. This is the same kind of increase that we have seen in RBI's repo rate increase. So overall, this is neutral. The one IPO will be opening today, Elin Electronics, and it will be closing on Thursday, 22nd. We have given avoid rating. Price band is 234, 247. Total issue size is 475 crores. 300 crores is OFS and 175 crores is fresh issue. Elin's business model is similar to listed companies like Dixon, Keynes, Sirma, and Amber. And that is, they are all contract manufacturers. The main products that Elin manufactures is LED lighting, fans, and motors, which are used in various kitchen appliances. Outsourced manufacturing industry is growing at 15 to 20% when it comes to the appliances industry. This is acting as a tailwind for Elin. And however, if we compare this growth with other listed companies like Dixon, Keynes, Sirma, they are mainly catering to new age segments like outsourced manufacturing for printed circuit boards, mobiles, and wearables like AirPods, etc. So there the growth is very fast. It's a new industry, and that is why they are growing at, that industry is growing at 40% CAGR compared to just 15 to 20% CAGR for outsourced appliances industry. So that is why the growth in Elin will be much slower. And even if we compare the valuations, broadly these listed companies trade at one time price earnings to growth. That is their PE is 40 and growth is also 40%. So, but in case of Elin, it is coming at a forward PE of 27 times, while growth we are expecting to be just 15 to 20%. So we think it is ahead of the business, and that is why we have given avoid rating. Thank you.
The Sterling and Williamson, that is ex-promote, the earlier promoter and now JV partner, along with Reliance of Sterling and Williamsons, will be selling around 4 to 5% of their holding in OFO sale. That is at discount to the current market price of around 283. Now they will be selling at around 270. So this will act as a bit negative for the company. Anyhow, the performance of the company in last few quarter was very lackluster, and company has reported losses in the recent past. So better to avoid this offer for sale. Apart from that, yesterday some data related to domestic air travel has come, and that has come bit positive. the domestic air travel data indicate that the domestic air passenger traveling from air is came at around 117 lakhs versus month on month 114 lakhs, and that is up by around 3%. But as compared to last year, it is up by around 11%. But if you compare Q3 number and expect similar type of passenger traveling to in the December month also, then quarter on quarter, that is from the second quarter to third quarter, the growth in passenger will be somewhere at around 15%. So company relating to the air travel businesses, domestic air travel business are likely to be having a positive impact of that. That include Ease My Trip and Dreamfolk, which is also a launch service in the airport. And the airline service companies, though, will be having a positive impact of that, and we are seeing higher rate of ticketing in the current quarter, but will be having some negative impact of currency depreciation, which is depreciated by around 4% quarter on quarter. That is from Q2 to Q3, and also the relatively oil prices, which has bit come off in this quarter, so will have some positive impact. So overall, the result will be for this airline company can show some improvement as compared to Q2. Then Balrampur Chini has announced that they had commissioned 170 KLPD additional capacity of the industrial alcohol or rectified spirit, and now the total capacity is at around 1050. So before this quarter, the capacity was at somewhere at around 580 KLPD, and in last 2-3 months, they have almost doubled the capacity of the distillery. So the whole benefit will be getting reflected into this quarter result, or best will be this fourth quarter result, where the full production will be there. This quarter, the full production may not be there because of starting of the mills. So the full benefit of the distillery will be visible in the result of Balrampur Chini, which will be having positive impact of that. And apart from that, even the export realization of cigars are quite good at current point of time. Somewhere at around 38 rupees for refined sugar is there, and Balrampur Chini has refined capacity. So there also they will be benefiting from the export out of the government has allowed to export at around 6 million ton currently, and maybe allowing further export in the next quarter. But the 6 million out of that, companies in the industry has already booked around 4.5 million ton, and proportionate basis, Balrampur Chini will be also be benefiting. So positive for all the sugar company and also for Balrampur Chini. So outlook continue to remain positive on sugar sector. So now I'll request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. Today, we are likely to witness some profit taking in commodities. So, gold, one can sell around 54, 400, 450 levels and maintain a stop loss of 54, 650. Prices are likely to be in a range and might test the support of 54,000. And in silver also, prices should correct from 67 800 to 68,000. So one can sell around these levels, and prices are expected to test 6700 67,000 on lower end. In crude oil, prices are expected to test 6400, and we recommend to buy around 60 to 50 and maintain a stop loss of 6150. In natural gas, prices are drifting down, and there could be further correction till 480 to 470 levels, whereby a pullback may be witnessed, but the upside is capped at 510 levels. In metal also, we expect prices to cool off, and copper, though it is trading in a range, but one can sell around 707 and maintain a stop loss of 712, and lower side 700 to 697 could be the possible target. In zinc also, 267 to 66 could be the ideal level where one can uh, witness some support area, and prices could bounce back from there. So upside is still capped at 270 to 273 levels. So all in all, if we get an opportunity around 266, one can enter for else on 272, 273, one can again sell. So that could be in a range. That's it from me. I'll ask Ria to take over from here.
Good morning, everyone. So, on the currency front, we did see dollar weakening a bit. This and euro gaining against the dollar in yesterday's session. This is because though the currency there has been a positive data that has come forth with respect to the German business morale. It has rose more than expected in December, and altogether the outlook for the Europe's largest economy has improved despite there being energy crisis and high inflation. This was in particular why the euro rose. Also, there has been statement from the ECB stating that there will be more interest rate hikes that will be done by them in order to tackle the high inflation that the whole eurozone is facing right now. And also they are considering at QT, which will be something that will be in discussion for the next policy meet. So this has led to a gain into the euro altogether. Bank of Japan has came out with its monetary policy, and they have maintained the rates at negative 0.10%. According to the statement, they have continue to maintain the ultra low rates and has reassured the market that there is no rush to withdraw the stimulus just yet. Though the targeted inflation, which was at 2% for the Bank of Japan, has surpassed and is right now at around above the level of 3%. Still, the stimulus is something that the Bank of Japan has continued to stay on. So this has led to a gain into the USD JPY, which has been retreated into the domestic pair as well. We have seen a gap up that has opened into the JPY INR, and in today's session, it can again gain towards 62.25, 62.50. So you can go long into the JPY INR above the level of 62.10 for a target of 62.25, 62.50. Whereas Euro INR is concerned, you can see some positive uh, leg into the pair. Look for a breakout of 87.95 to go long into the pair for a target of 88.10, 88.25 with a stop loss at around 87.80. GPP INR will continue to remain into the bearish tone. Any highs into the pair should be taken as an opportunity to go short into the GBP INR. If it could test even 100 to 99.50 in the coming few sessions, and thus you can look out for a breakdown at around 100.44 levels to go short into the pair for a target of 100.27 levels with the stop loss at 100.80. uh, as far as USD INR is concerned, there is a quite volatile open in today's session. We have seen it testing the lows and highs of 82.78 and 82.66. Uh, However, we are not seeing any triggers that could push the rupee towards the 83 or 83.25 levels, at least in this expiry. And this is the reason why we have given a short of 83 call. And you can carry on with the same strategy. The momentum into the pair will be very limited. And will be within 10 to 12 paise, and thus taking a position right now into the future is not advisable. You can, however, short the support levels and resistance levels going forward into the USD INR. So that's all on the currency front. Thank you.